Back in 2019, the Department of Trade and Industry of the Philippines would go on to announce that a Chinese company by the name of Panhua Group would establish a 305-hectare integrated steel mill, signifying the attractiveness of the Philippine steel processing industry. The strategic investment is located at the southern point of the Philippines, the major island of Mindanao, sitting exactly at the Fividec Industrial Estate of the Misamis Oriental Special Economic Zone. What makes this so crucial for the Philippine economy is the fact that Memorandum of Understanding signed with the official Philippine governing authority had made headlines as one of the largest ever investment confirmations that the Philippines has ever received. The investment figure registered was a whopping $3.5 billion worth of investment, a massive and unfathomable size that made the Panhua Group steel mill project surpass that of any other former investments made in the Philippines by a Chinese firm. And as a steel mill project, it may even suggest a somehow underlying connection to the revival of the former National Steel Corporation, a defunct program that once designated the Philippines as one of the leaders in the entire steel industry of Asia. This project, in other words, may have a chance to bring the glory days of when the Philippines was standing as a leading figure in the steel industry. This project, after all, was not just another small initiative set by the government or a foreign company. It was projected to employ a whopping 50,000 jobs and a steel capacity of about 10 million tons. Furthermore, the $3.5 billion project is also expected to consist of its own port, an industrial park, and other downstream industries. All of these are expected to be completed in 6 to 7 years. Such an endeavor would undoubtedly bring huge economic benefits to the Philippine economy. Yet, such a huge project is even unknown to most people, and most likely, only those who are living nearby the location would have ever heard of it. So, what led this massive investment being brought forward to the Philippines? And what is the latest information that is being poured out for the public to see? Well, let us discuss the project further, its backings, and what the future may look like. The Panhua Group, a private Chinese company, is the responsible entity for this project. It is a completely private company, as reported by the Department of Trade and Industry. Being a Chinese private company, in other words, should imply that they have little or even no connection with the Chinese government, which are often under scrutiny from many Western countries. However, while this involves a private company, one should still not disregard the fact that this investment may be in conjunction with the growing Philippine-Chinese economic ties, and the fact that Panhua Group itself, according to its official company statements, shows that it is quote-unquote in line with the One Belt and One Road strategy of the Chinese government. But either way, whether it is directly connected to the government or not, it's still going to bring a lot of economic benefits to the Philippines. Panhua Group, other than its private undertaking, is also one of the steel sheet producers globally. In fact, it also wants to become the so-called king of steel sheet market. The company's current operations and rankings are stated to be the 156th largest manufacturing firm in China as of 2017 and ranked 256th in the same year in the list of the largest private enterprises. It was established way back in 2001, and it only took 2 decades for the company to hold over 2.7 million square meters of land occupations, consisting of 21 group members, more than 3,500 employees, a turnover of over $7.5 billion, and an annual capacity of about 6 million tons. They have operations in steel sheets, automobile steel sheets, research and development, shipping terminals, and even through fat dog supply chains. It also currently owns 2 manufacturing bases located in China. Their future plans are to establish a presence not just in the Philippines, but in Africa and also in Europe. Such a massive company, yet by all standards, its coming steel project in the Philippines is arguably going to be its largest ever. For a company to employ 3,500 people and have an annual capacity of 6 million tons is already a very big feat. It was enough to rank them amongst the largest manufacturing firms in China. But its coming steel project, do take note, is a whopping 10 million ton capacity and expected to employ 50,000 people. Therefore, its current capacity right now would be overshadowed by its coming investment project in the Philippines. And yes, that's just how massive this steel mill in Mindanao is. In fact, one of the largest steel producers in the country right now is known as Steel Asia, which owns 5 steel mills across the archipelago country, and a further upcoming one which will be their 6th. Steel Asia, however, only has a capacity of about 2 million tons per year, and its upcoming 6th project will only add up to about 1.1 million tons. This goes to show just how massive Panhua Group's investment is in the Philippines, and also for the future of the Chinese company itself. Panhua Group aside, what is the latest information about this project? Well, as it is a slated 6 to 7 year timeline completion, it will likely be expected to open up later this decade. However, the 6 to 7 year timeline is also for the 3 phases of the project. The first phase, which will be completed in 6 to 7 years, will already create 30,000 jobs, which can be understood as an economic contribution and will be seen early on. The most recent information, on the other hand, as far as we found, was just released in April of 2022, reported by the Philippine Consulate General of Chongqing, China, whereas the released information stated that the Philippine Consulate has discussed with the Chinese company further the integrated steel mill project and some other discussions about unconnected information about the steel mill. The latest media article we can find about when the project started was an article by Manila Times, which stated on January 15, 2021, that the Panhua Group had started to build its plant in the vicinity. Although this may seem like a massive endeavor at a price tag of about $3.5 billion, it is in fact not even the largest. This project itself is overshadowed further by another steel mill project known as the First Mindanao Integrated Steel Mill, consisting of Chinese-based companies known as Baowu Steel Group Corporation, Huili Fund, and China Metallurgical Group Corporation. This project is far more than the $3.5 billion, which is reported to be over $4 billion and has already received its groundbreaking back in 2020. Further on with this other Chinese project is that it is also expected to cater to tens of thousands of employees. But we will not talk about this project, we'll save that for another video. For now, we must discuss the final agenda, which is corruption. You see, the southern islands of the Philippines, or even the entire country in general, is still shrouded with such an issue. Both of these projects, the First Mindanao Integrated Steel Mill and the Panhua Group Steel Mill, will likely need proper governance to ensure their cleanliness. The high-up governments themselves have even cited that the politicians in the area must not repeat what happened way back in 2008 with Hanjin Heavy Industries. What happened back more than a decade ago was that when the Korean shipbuilding giant had initialized their $2 billion shipyard facility, it was cancelled and was never picked up. Why? Corruption. The local officials of the land had spread their greed. For it to happen again with these new projects will be disastrous to the entire Philippine economy if only a few individuals choose to do so. Therefore, a volunteer watchdog by the name of Crusade for Clean Government called upon the President of the Philippines to get rid of all the corruption involved in these projects. After all, combined, these will bring about $7.5 billion worth of foreign direct investments to the country, and an investment figure that big is truly phenomenal. Not even because of its price tag, but because it can be the beginning of many more out there. And if the Philippines wants to continue to lure in these investments, it truly must get rid of corruption, as these can shun investors. But anyway, the Panhua Group's $3.5 billion steel mill investment is big, and undoubtedly it will bring massive economic benefits to the country. If one even remembers the old National Steel Corporation, which was once regarded as a leading Asian steel corporation, one will then tell those people who remember the project that it was a massive economic contribution. Billions of pesos were at stake back then, but its failure was well unfortunate. Do let us know what you think. Thanks for watching.